Alright guys, this is test number 3 in the Opening Range Breakout series. In the first test I tested the long version where the strategy only bought when price broke above the opening range high. In the second test I tested the short only version where the strategy only sold when price broke below the opening range low. Now for this test I'm turning on both directions. So this version can take either a long trade or a short trade, still using the basic idea. The opening range is the first 15 minutes of the trading day from 9:30 to 9:45 Eastern Time. During that time, I marked the opening range high and the opening range low. For this test, if price breaks above the opening range high, the strategy can enter long. If price breaks below the opening range low, the strategy can enter short. But one important thing to understand is that this is still one trade per day. So it does not take both trades on the same day. If the long breakout happens first, it takes the long trade. If the short breakdown happens first, it takes the short trade. Whichever one triggers first is the trade for that day. Using this example, the opening range high is 60.50 and the opening range low is 60.38. For the long setup, the price breaks above 60.50. The long entry would be 60.51. The stop loss goes at the opening range low, which is 60.38. That means the risk is 13 points. Since this test uses a 1R take profit, the target is 13 points above the entry. So the long take profit would be 60.64. For the short setup, if price breaks below 60.38, the short entry would be 60.37. The stop loss goes at the opening range high, which is 60.50. That also gives a risk of 13 points. Since this test uses a 1R take profit, the target is 13 points below the entry. So the short take profit would be 16.24. So the both direction setup is simple. Break above the opening range high, enter long. Break below the opening range low, enter short. Stop loss goes on the other side of the opening range. Take profit is 1R, one trade per day. And just like the first two tests, the risk is not fixed. The risk depends on the opening range size for that day. Some days the opening range is small, some days the opening range is bigger. So if the opening range risk is 10 points, the R target is 10 points. If the opening range risk is 20 points, the R target is 20 points. So this test is not testing a fixed target. It is testing the theory of trading the first breakout from the 15-minute opening range, either long or short. The settings are simple. No indicators, no news filters, no guessing. Both longs and shorts turned on. One trade per day. Break above the opening range high for a buy. Break below the opening range low for sell. Stop loss on the other side of the range. Take profit at 1R. Now let's look at the MetaTrader 5 report and see what happens when both directions are turned on. Alright, now we're looking at the actual MetaTrader 5 report for the both direction opening range breakout test. Before looking at the profit, I want to confirm the settings. This test is on the S&P 500 on the 1-minute chart. The settings show that long trades were turned on and short trades were turned on. So this is a true both direction test. The test had 1,773 total trades. Out of those trades, 872 were winners and 901 were losers. That gives us a win rate of 49.18%. So right away, this both direction version still won less than half of those trades. Now let's look at the money side. The gross profit was $124,011.40. The gross loss was negative $124,593.58. So after subtracting the losses from the wins, the final net result was negative $582.18. The profit factor was 1. For me, this means that the strategy was basically around break even, but it still finished slightly negative. Looking at the balance graph, you can see the same thing visually. The account had some recovery periods, but overall, it did not create a strong upward curve. It mostly chopped around and finished slightly lower than where it started. Average winning trade was about $142.21. The average losing trade was about negative $138.28. So the average winner was a little bit bigger than the average loser, but not enough to overcome the losing trades. Expected payoff was negative 33 cents per trade. That means on average, every trade lost about 33 cents. The equity drawdown was 5.54%, and the maximum losing streak was 8 losses in a row. The report also shows 956 long trades and 817 short trades. The long trades won about 50.31% of the time. The short trades won about 47.86% of the time. So compared to the first two tests, the results make sense. The long-only test had a small positive edge. The short-only test finished negative. And when both directions were combined, the short side pulled down the result and the strategy finished slightly negative. My honest conclusion is simple. The both direction opening range breakout with a 1R target did not pass this test. It was close to break even, but it did not show a strong enough edge. That does not mean the idea is useless. It means the raw both direction version with no filter and a 1R target is not strong enough by itself. This is still useful because now we know something important. The long side performed better than the short side. And when we combine both sides together, it did not improve the strategy. That is exactly why I'm testing one version at a time. So that wraps up test number 3. In this test, I turned on both longs and shorts. The strategy could buy above the opening range high or sell below the opening range low, but it still only took one trade per day. The final results were slightly negative. It had 1,773 trades, 872 wins, 901 losses, and a 49.18% win rate. The final net result was negative $582.18 with a 1 profit factor. So for me, this is not a strategy I would trust by itself. The long-only test had a small positive edge. The short-only test failed, and the both direction test finished around break even, but slightly negative. That gives us a better picture of the raw opening range breakout idea. Now we have 3 baseline tests. Long only 1R, short only 1R, both directions 1R. Now the next step is to keep building. The point of this series is simple. One idea, one change at a time. Backtest the results, let the data decide. This video is only for testing and education. I'm not telling anyone to trade this strategy. I'm just showing the rules, the report, and the results. That's it for this test. Now we keep building.